One of the common questions about trading, which is the best approach, price action or indicators? In this video, we are going to try and answer that question once and for all. Hello, I'm David Jones from Capital.com. As I said, one of the most common questions, one of the most confusing things when you start trading is, should you just be trading using price action or should you be trading with indicators? And there are so many indicators there to choose from. I know which way I lean on this, but more of that later. So in a second, what we're going to do, jump on the platform, just explain the difference between price and indicators. I'll come back, talk about the pros and cons a bit more. Then we will go in, look at a real market and see how both of these approaches would have fared. As usual, if you're watching this and you haven't subscribed, if you can click on subscribe, support the channel, and we will continue to push out, hopefully, what you think is interesting content like this all through the year. First of all, let's jump on the platform and talk a bit about price action and indicators.
So when we talk about price action versus indicators, in a nutshell, this is what we're talking about. So this is the price of silver. Going back to the last quarter of 2018, it could be any market. I'm just using silver as an example here. So it's really, what's more important? Is it what the price is doing? So we can see the price movements here. These are daily candles. Or actually, should we be focusing more on indicators, which are a derivative of the price, a mathematical formula based on what the price has done historically. So down here, we've got the RSI, classic overbought, oversold indicator. Below that, we've got the MACD. Where should our focus be? So I'm going to talk a bit more about how I see this breaking down now. Then we'll come back onto the chart and we'll walk through some real examples and see if we can come up with a conclusion.
We're going to go back on and look at some real examples in a second, but let's just expand on this idea. You know, if I nail my colors to the mast to start off with, I'm a big fan of trading using the price rather than just focusing on indicators. We did a video a few weeks back on different price action techniques, so take a look at that. So it can be very confusing when you first start trading, I think particularly for new traders. And I think lots of new traders will lean towards indicators because they believe there's a holy grail out there that if they can just get the settings on the stochastics, the MACD, the RSI right, then untold wealth is going to be delivered to their account from financial markets. But more experienced traders know that is not the case. And when we talk about price action, we're typically looking at things like support, resistance, trends, breakouts, that sort of stuff. And I'll cover all of this when we get back into the trading platform. I think one of the common problems is which indicator do you pick? You know, in this day and age, and again with our software as well, there's probably nearly 100 different indicators you can put on a chart, so it can be a very daunting approach. But perhaps the best method is a combination of the two. So let's look at that now. We'll look at how price action fared, how indicators fared, and is there actually a middle ground that can work better for a lot of traders. Let's take a look on the platform.
Right, let's just walk through some examples here. So what I've got here, the section I've got is silver, December 2018 through to June 2018. We'd seen that clearly the price had been in decline. So from a price action point of view, we've got a downtrend. This downtrend had been going for about 4 months. And then in June, early June 2019, we get the break of the downtrend. So it's the classic price action buy signal. So whether we buy, I don't know, here somewhere, 1460 on the break, or we leave it a couple of days, we end up buying near 15. If we're trading off price action, looking at this, classic charting approach is to look to be a buyer. But if we are focusing on the RSI down here, it's overbought. The RSI has moved above 70%. So we'd be doing nothing. Let's walk forwards and see what happens next. So the price does sell off. The price sells off from $15 down to $14.75. But from a price action point of view, we'd still treat it as a buying opportunity. The RSI has cooled off, has dropped back to 50, but still hasn't gone oversold to give us a buy signal. Price moves higher again to 15.14. So now, the person trading off the price action should still be long, whether they bought in on the break, whether they ended up buying in at 15, if they waited a couple of days, if they bought the pullback, either way, they'd be long. But if we were trading on the RSI is going overbought again. So the RSI, purely dedicated trader, if there is such a thing, still hasn't done anything. And this is something of an extreme example because we did see big moves for precious metals in the summer. But here we are. We're now in July 2019. The RSI again has gone overbought on the way up around about $15.60. The price doesn't care. The price has moved up another dollar to touch 1660. So here's, I think, a really good example how if we are religiously following an overbought, oversold signal, it can keep us out of really strong trends. If we have a really strong move in the market, things like RSI, stochastics will show an extreme far too quickly. And the risk is we miss out on a good move. So here's, again, that trend into September. So the trend follower, the price action trader would still be in. The RSI has been overbought from about 1750 again, all the way up to 1950. So again, sticking to that would have missed out on a $2 move. But if the trend follower was waiting for a break of the trend, they'd have given back more than $1.50 in this move in silver. Whereas arguably, I mean, clearly it went really extreme here up to 90 and did end up calling the top. But the RSI, I think, has missed out on so much on the way up that really in a strong trending market like this, it's no good. Let's look at what happened on the way down. So here's the peak for silver in September 2019, around about $1960, $1965. The market then corrected, came back to that trend line for the third test, middle of October. So the price action trader could well have been going short if they were looking at this time frame. Looking at the RSI trader is probably doing nothing because the RSI is sitting at 50. Let's walk forwards. And the trend following trader would have been probably stopped down as it broke out of that trend. So the RSI did the trader a favor there by keeping him or her out of the market. Let's jump forward to early November in silver. So the price goes below the old support, goes below those October lows at 1685, 1690, that sort of area. So again, here, the price action trader break of support can be a classic sell signal. So the price action trader may be looking to sell short here. But if they were using the RSI, they might have thought, well, hang on, the RSI is oversold. Do I really want to be a seller down here? Again, let's just jump forward. So that oversold RSI signal here may have saved that trader from entering into a not profitable short. Okay, so there's an example there where I think we had the break, but the RSI, if you were following that, would have kept you out. So that's where the indicator has helped you. So it kept us out of so much of that trend on the way up, did a bad job there, but here it's arguably done a better job. And we jump forward to early December. Breaks below the November low. Again, the price trader may be thinking, I'm going to sell short. We're breaking below. We're finally going to see a sell-off in silver. The RSI, though, what's interesting is what's happening with the RSI. We have actually what's known as bullish divergence. It's the first example I've shown in this video. So the market has made just about lower lows. The RSI, though, is making higher lows. So this can be a suggestion that even though from a price point of view, the market looks weak, actually the selling is running out of steam. So here we have actually a conflict between the RSI and the price. So the price is really telling us to sell. We've got a break of support. The RSI is saying actually this could be a buying opportunity. Let's walk forwards and see what happens next. Lo and behold, the RSI has turned out to be correct here. So we had that divergence. That break below those November lows ended up being a false break. It only pushed through by a bit, spent a couple of days down there. Then we saw the market recover. And once again, our RSI has flipped to be overbought. And this is bringing things right up to the present day. The RSI, the market, the price of silver has traded as high as 1880. It's sold off about $1. The RSI has come oversold and is currently sitting at 50%. I suppose one last thing we could pick up on from a trend following price action point of view here. After that bullish divergence on the RSI, silver, when it moved through about $17, did finally shake off that correction that had been in place since September. But it would have got you in later than the RSI bullish divergence signal. So the RSI bullish divergence definitely had the upper hand here. So what can we draw from this? I think really there are no hard and fast rules, particularly when it comes to indicators. I would put much less weight on overbought, oversold versus price action. I'd always let the price lead me. But if we do see these fairly rare signals, bullish divergence on the downside, bearish divergence on the upside, they are worth paying attention. But for me, if I had to use one approach, I'd always lean towards price action.
So that divergence example worked well at the end, but if you were relying on the RSI throughout that uptrend, you missed out on a lot of the move. I'm still a bigger fan of price action, but I can definitely see the merits in combining both approaches. But for this video, comparing the two, we'll leave things there. So from me, David Jones and Capital.com, good luck with your trading.